Hello everyone, and welcome to this presentation on how to trade pullbacks in volatile markets. Welcome, thank you for taking time out of your morning to join us today. This promises to be a great presentation, and thank you for enjoying all of our presentations. We've gotten a lot of testimonials and emails in the past telling us how much they enjoy this and how much it's really helped them. Welcome once again. My name is Primo. I am the president and founder of Specialist Trading, and we are first and foremost an educational company. I know a lot of webinars simply like to stress what they market and what they basically are selling the public, and then try to give you a little bit of a tease, and then basically ask for the world in order to gain the information. We're a little bit different. We like to educate you in every presentation that we give you. Even today, I'm going to be showing you some really great techniques that you can start using as early as today. Now, I started my formal trading in the markets roughly 38 years ago. I started trading on the floor of the Pacific Stock Exchange. I was on the stock exchange for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, if you're not familiar with what a specialist was, since there aren't a lot of them around that much anymore, except for New York, specialists are the gentlemen who made markets in a select group of stocks. So if you wanted to purchase or sell a specific equity, you had to go to the trader who specialized in that, who made the market, who set the price for those particular issues. Now, I did that once again for 9 years. I traded through the crash of 1987 and the bull market that followed. I've been trading in just about every market environment and every market condition around imaginable. I've traded every trading strategy or system around. So I know what works in terms of consistency, and I know what doesn't. All right, I've seen fly-by-night techniques that have made hundreds of thousands of dollars almost overnight and then given it all back. And then I've seen techniques that are very, very simple that usually have stood the test of time that most older traders use, and they have sustained traders for 30, 40, 50 years just like myself. So these are the things I teach in specialist trading, the things that have consistency and the things that will able to give you the true meaning of success, which is longevity. The ability to trade years down the road so that you've never wiped out your account. You're able to trade. That's what we do at Specialist Trading. And as I stated, we are an educational company. We're all about educating you rather than simply force-feeding signals down your throat and telling you what the perfect market is to buy, what this market's going to do, where to sell, what time frame. We don't believe in that. We feel that we empower you with this information so that ultimately you can make your own decision. That's the only way to get on the road to consistency. I'm going to share with you a great technique for trading pullbacks. In my opinion, this is probably the best technique I've seen in my nearly 40 years of trading, and I specifically use this on a daily basis on my intraday trading. But before we begin, we're required to show you our disclaimer, so please take a moment to view it. I'm going to show you some great performance results in virtually every market and or time frame. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we're required to show you this as you're taking a moment to view it. I would also like to take this time to invite each and every one of you to follow us on Twitter if you haven't done so already. You may want to copy down our handle right there at SPC LST-TRADG, obviously abbreviation for Specialist Trading. Each day I post new information, anywhere from daily financial wisdom, different tidbits about trading I've accumulated along the way, to actual signals that our strategies have currently generated. Now, a couple of weeks, I posted a great signal to go long that one of our strategies, or actually multiple strategies of ours, generated to go long the E-mini, and we had a really nice rally after that. And then just a few days ago, using an entirely different strategy for our Forex traders, we posted a sell in the British pound. And that has gained roughly about 125 pips to the downside in just the last 2 days. So there's a lot of great information, although it's very limited because of the nature of Twitter. So if you'd like to get more information about it, you can go to my sister site, which is Pro Trader Strategies. They handle the market and promote all of my courses and techniques, and they've created a Facebook page. So you can just simply log on to Facebook and go to Pro Trader Strategies. There's a lot more information about what we do, myself, current videos on there where we teach different techniques and tidbits. So a lot more in-depth and a little bit longer information to get at the Facebook page. All right, so since I said we are an educational company, here's what you're going to learn today. I'm going to start off by sharing with you how most people trade pullbacks. And I say this from personal experience because this is the way I first started trading pullbacks roughly over 35 years ago. And then I'm going to share with you what I feel is the best way to trade pullbacks. It's a simple but high probability technique for trading pullbacks in all markets and all time frames, okay? So get out your pencils and paper. The one thing I want to state, first of all, since I'm going to be giving you a ton of information here in a relatively short time, if you could please wait to ask any questions at the end of the presentation. The presentation seems to flow a lot better if we just wait till the very end. So if you have a question, kindly wait till the very end. We'll get to all of them in just about 20-25 minutes from now. The one question I will answer is the most popular, and is this being recorded? Yes, it is. We record all of our presentations. So if you have to leave early, if you're having technical difficulty with your computer, you can request a link to the recording from Proprietary Strategies. All right, so why don't we begin? And once again, we're going to start out first of all by how most people trade pullbacks. Trading pullbacks is usually done through conventional wisdom, but I know a lot of people don't trade pullbacks or they're not familiar with them. So let's just give you a brief refresher course on what a pullback actually is. The first thing you need to know about trading pullbacks is that you have to establish a trend. A trend has to be established and you have to be able to identify it. Now this is just a common, very generic way of finding out what a trend is, and that's an uptrend there, and as you can see, it's just the opposite side of the coin is a downtrend. Now, one thing I've learned through my trading is that trends rarely go straight up the way most people are able to view them. They're very, have a lot of fits and starts, kind of a stair-step approach. So oftentimes you will see straight up, excuse me, and straight down markets where it's easy to find the trend. Other times it's a little bit more difficult where you have this jagged kind of up a little bit, down a little bit, up a little bit, down a little bit. So here's what most people do when they're looking to trade pullbacks. What you want to do is establish and see that some type of trend has been established, and then on an uptrend, when you get a little sell-off there, as you see, this is your pullback to the downside. And once some certain parameters are met, now these parameters could be based off institutions, they could be based off volume, they could be based off Fibonacci numbers, they can be based off the tides of the ocean. It really doesn't matter. But once all the parameters are met, this is most likely where your pullback entry is to take place, and then the trend resumes. So that's the concept behind pullbacks. In an uptrend, you want to pull back. Price wants to sell off a little bit. It wants to decline before it goes back up even higher. Now in a downtrend, the same thing will happen. You'll have price going lower, and then you'll get some type of a snapback rally, okay? Some type of a pullback to the upside. Once all the parameters are met, regardless of what they're based off of, this usually will generate some type of a sell signal. And the concept is the trend will resume going lower. So you want to take advantage of selling up here before price goes lower. Excuse me. So this is what we usually do as traders using this type of traditional type of method of trading pullbacks. We look for parameters, certain levels to be met, and once they're met, we've seen that they've worked before. Well, we jump in and we want to apply them again. The only trouble is when we usually jump in, this is what happens. Price goes lower. And the same thing will work on a downtrend. The same parameters were met that were met right here, and it worked perfectly. So now the parameters are once again generated. So you decide to sell, and it continues to go higher. Now, no better is this represented than in support and resistance, okay? Now, first of all, let me just state that there are a lot of traders, many of them who I know, who do very well trading support and resistance. But they are a very small minority compared to the majority of the rest of us trading. In other words, they represent about 1 or 2% of all traders. The majority of us, myself included, have a very difficult time trading support and resistance because it's too subjective. All right, one trader's support is another trader's resistance. Everyone has a different idea of where those support and resistance levels are. If we look at this scenario here, here's a very common uptrend, as you can see, and we've labeled where the support should be, the first bottom and the second bottom. So naturally, you would think in a strong market, all the fundamentals are okay, the market has been going up. These are the places where you'd want to purchase. But usually, this is what happens. See, there's not a lot of consistency in it because, it works until it doesn't work, and then you give everything back. Now you'll see this same exact scenario in Fibonacci levels. Once again, I know of some traders who do very, very well trading Fibonacci levels alone. That's all they do, all right? But they're probably the 1 or 2% of all traders. Once again, myself included, I've never been able to make a dime trading Fibonacci because it's too subjective. You'll have one trader say, okay, this is the level, this is the percentage retracement, and another one will say, no, that's not it, it's at this level. Everyone will come up with a different idea of where the Fibonacci level is. It's not cut and dry. Here's a perfect example. We look at this generic chart here. Obviously, we're in a downtrend, and a very simple and basic way to trade Fibonacci levels for pullback purposes is to have a 50% retracement. In other words, you retrace, or the pullback goes up at least 50% of the move to the downside. So as you can see here, here's where the 50% retracement would be. This is where you step in and sell because, after all, this is the way you've been taught, and this is what usually happens. As I said, I know of traders who do very well trading support and resistance, and traders who do very well trading Fibonacci. But it's not consistent, all right? The majority of us cannot trade that way. It's not cut and dry. We want things that everyone will look at the chart and see the same scenario. One person will not come up with a different scenario. Everyone will say, no, you can't, there's no way to argue with that. We all see the same thing. And that's the way the majority of us learn. That's the way I was taught, and that's what we teach as specialist trading. So there's no room for subjectivity. There's no room for guessing. Now, here's my definition, what we feel you should really know about pullbacks. Now, entering a trade based off support and resistance and or Fibonacci levels is similar to picking tops and bottoms. These are extremely difficult techniques to master because they're very subjective, as I just stated. So basically, you're just entering an order and hoping and praying that it stops there. But in order to have a high probability pullback entry, one must wait for confirmation that the pullback has concluded and that the market is headed in your desired direction. So we need a little confirmation that we're going back in our direction. We can't just put an order in there and hope and pray that it's going to be stopping there, either to buy or to sell. So let's look back at our generic scenario right here. Once again, uptrends first of all. Okay, here's where we first bought, and it worked perfectly. Now, here's where we wanted to buy again. And as you can see, it didn't work well that time, okay? But what we want to do this time is wait for confirmation. In other words, wait that it's going in our desired direction. And then that's when we jump on board. And then we have a higher level of consistency that it's going to be going in our direction because we waited. So we didn't buy at the exact bottom. We didn't buy at the exact level. It doesn't matter. What matters most is that we're consistent. Now, the same thing will work to the downtrend side, all right? Instead of just placing a limit order and hoping and praying that it stops at these levels, whatever they're based off of, they could be based off the full moon. It doesn't really matter. We're basically just guessing that it's going to stop there. What we want to do is wait for confirmation that it's going in our desired direction, just as if you're waiting for a train to leave the station, and once you know it's going in the direction you want to go, you jump on board that train. You see, you're not going to jump on a train that's going in the opposite direction of where you want to go. You're going to want to be on board the train that's going in your direction. The same way with waiting for confirmation. You wait for a confirmation that the downtrend has resumed, and so what if you don't sell at the top? That's okay. You're going to have a higher level of consistency because the probabilities are in your favor because you've started to head in your desired direction. So let me share with you three types of confirmation. These are very valid, they're generic, and you'll see them a lot. In fact, we use a few of these in our strategies at specialist trading, but they're very generic and they're very basic, all right? First of all, you want to see that price trades above the previous bar, okay? It could be below the previous bar if you're selling. So in other words, once you have, let's just say you have to base your entry based off of Fibonacci levels, rather than just place the level order in there. Remember, you're just pretty much gambling and hoping that it's going to stop there. Rather than doing that, what you want to do is place your order one tick above if you're buying or one tick below that area and continue to track it. That gives you the probability that it's most likely going to be headed in your direction, okay? Another great type of confirmation is a candlestick patterns. Candlestick patterns are great for telling you when a trend is supposed to change, supposedly. Okay, so you can look for a specific candlestick pattern. If you're looking for a sell-off, well, you can look for a little candlestick pattern that's telling you the uptrend has stopped or the pullback has stopped, and then that's your indication to sell. And then lastly, you can look at an indicator. A lot of people like to look at overbought, oversold tools to tell them when it's time for a trend change. In fact, let me show you what these look like, okay? Just so you can understand. In this chart here, we're looking at a generic chart. Obviously, we've sold off. Someone would say, well, we're in a downtrend, but this is just the pullback. We've been in an overall uptrend, and this is just our pullback. Let's say that your Fibonacci levels, your support and resistance, or your tide to the ocean has told you that right here is where the pullback should conclude. Now, rather than just simply place a limit order and hope and pray that it's going to stop somewhere around here, you could wait for it to trade 1 or 2 ticks above. You see, that'll give you the confirmation that it's going in your desired direction, just as if the train leaving the station in your desired direction. Or you could wait for some type of candlestick pattern. Here is a bullish engulfing pattern. All right, this is commonly known as a very bullish type of technique that the trend has stopped going lower and it's most likely going to be going higher. So this is one thing you could look for. Another thing is to use some type of overbought, oversold oscillator. This is just simply a slow stochastic plotted here. We're in the so-called oversold area, and once we go above there, well, that's your indication that you're going back higher, okay? All of these things are nice. They're not by any means 100% foolproof, but they have been known to work, and they will give you that confirmation many times. They're very generic, and you can start using them as early as tomorrow, okay? Very simple. Excuse me, very simple, very basic. They in no way are difficult to figure out, but they'll give you a little higher level of consistency if you apply them, okay? Those are 3 types of confirmation. Are they what we're going to be showing and revealing to you today? No, these are just things you can start using, experimenting with just to heighten your level of success. But what I feel is the correct way to use and to apply with pullbacks is something I've talked about in the past, and I'm sure a lot of you are familiar with it. I know we have some actual students in our class today who can attest to it, and this was by simply applying the PET-D. All right, this is a tool that I've been using for nearly 40 years on a daily basis. That's how much I believe in it. And I'm going to show you how simple it is to capture pullbacks. This is a proprietary color bar algorithm. Okay, something I was introduced to on the floor when I was trading roughly 40 years ago, and something that we've devised into a color bar algorithm to make it very simple so that you don't have to come up with this formula for each and every bar. And what it does is, if you have a series of green bars, well, then you are in a short-term uptrend. If the algorithm colors the bars red, you're in a short-term downtrend. It's that easy. There's no calculations. There's no levels you have to try and discern and use your discrepancy or subjectivity to come up with. There's no complicated news events you have to look at. It's just that simple. But how do we apply it when we want to look for pullbacks? All right, let's say we have a buy pattern. We've found out where a pullback is. What you're going to see with the PET-D, once it colors the bars, is that in an uptrend, you're going to see a small amount of red bars, okay? This doesn't mean anything. All it means is this is the pullback, right? In other words, you've been in an uptrend, and all of a sudden you start to see a small amount of red bars. This just means that that's the pullback taking place. You're now in a small little sell-off. Now, the next green bar that appears is your confirmation that the pullback has concluded, and that's your buy setup. That's how easy it is. So remember, once again, you don't have to worry about any levels. You don't have to see how shallow it's gone or see what the institutions are doing. I mean, that's just noise. That's just complicating your trading. Let's make it simple. Let's look at this older chart of Facebook here. As you can see, the PET-D has colored the large amount of these bars green. So this is giving us the authority now that we are in an uptrend, a full-fledged uptrend. But now we start to see a series of red bars. So is this telling us that the trend has changed? No, most likely it hasn't, because we're still in an uptrend. If we saw maybe 5 or 8 bars being red, that would tell us that the trend has changed. Now we're in a downtrend. But we're not. We've only got a number of 4 bars here, so that's still telling us that we're just in a pullback. So we wait for the next green bar, as we see here, and that's our indication to buy. So you simply buy there. It's telling you the pullback has concluded, and look what happened. Now, obviously, we didn't buy at the bottom. We didn't get the very lowest tick or right next to the lowest tick. That's a gambling mentality. We don't care about that. I know a lot of educators are always looking for the lowest tick or right next to it or selling on the highest tick. I mean, that's silly. I mean, the traders who've been trading for 30, 40, 50 years don't worry about things like this. All you want is a high level of consistency or high probabilities so that you're in sync with what the market wants to do. That's the only thing you should be interested in. Now, what about if we're selling, if we're looking to a pullback to the downside? Well, in a downtrend, you're going to see a small series of green bars that are going to appear. Not to get worried, that doesn't mean the trend has changed. It just means that this is the pullback taking place. Now, the next red bar that appears after a green bar is the confirmation that the pullback has concluded and that the trend is going back in the desired direction. So as we look here at this 5-minute chart of the E-mini, all right, the majority of the bars are red. Starting here, the majority of the bars are red, and we start to see 4 bars that are colored green. Okay, that's still not enough. We need at least 5, or probably better even 8, to tell us that the trend has changed. And we're followed by a red bar. So this is our confirmation to sell. So on this 5-minute chart, you sell, and look what happens. Okay, and then we have 5 more green bars here. This gives us a little heads up that maybe the trend is changing, but then we're followed by another red bar. So you sell again, and it goes down a little bit, and you're given another opportunity to sell, a green bar followed by a red bar. And you see how easy it is to find these pullbacks. Once again, we're not looking at any levels. You don't have to purchase some fantastic algorithm for thousands and tens of thousands of dollars in order to find out where these levels are. You don't have to subscribe to some chat room or trading room to tell you where today's levels are. You don't have to listen to news. You don't have to worry about economic conditions. It's all right here in the algorithm. It tells you everything you need to know. Why? Because it's listening to the market. The algorithm knows how to listen to the market, and all it does is simply tell you what the market is doing and what it wants to do. That's it. All right. It's not based off of anything that is an outside source. All right, so let's look at some current examples using this technique, which I feel is the most powerful way and the correct way to trade pullbacks in volatile markets. All right, here's an example here in BXP. Now, someone could say, well, we've kind of been in an uptrend, but we rolled over, and now it looks like we're rolling over again. So, I'm not sure we're going to be going higher. In fact, looking at this for the last couple of weeks, 3 weeks, it looks like we may be rolling over to test these lows, okay? So how do you know what the trend actually is? It's very difficult. Everyone has a different idea of what the trend is. Actually, it's very simple with the PET-D. You just simply add the PET-D tool, and do you know what the trend is now? Well, the majority of bars, 99% of the bars have been green. So the trend has always been up. Even if we started to have a couple of sell-off days here, it doesn't matter. We've still been up. Now we had 1 red bar here. Does this mean that the trend is changing? No, it just means that we may be in a pullback. So we want to just watch it a little more. Look at the very next bar. It's a green bar. So according to our pullback method, that is actually a buy setup. So you could have purchased the stock right there at the close of that bar, and in the next 4 days you could have made 8 points. All right. Obviously some news came out or something happened. We didn't know any of that in advance. All we knew was that the PET-D said, well, from our calculations, the market is telling me it wants to go back up again. So I colored the bar green. Okay, that's simple. How about IBM? All right, this was coming in the first week of November. Now, obviously, something happened where the stock gapped down much, much lower. But then coming into November, it just basically was going higher, then went lower, then it started to go higher again. So it looks like we're in some type of a range. How do we know what the real trend is? I mean, perhaps we're just going to go all the way back up and fill this gap. It's easy to find out what the trend is with the PET-D. The trend has always been down, even down before we had the gap down opening here. So the bar was red before the market fell out of bed. It was telling you we're going lower. All right, and it's continued, even when we had these nice rallies here, it's continued to stay red until this day, which I believe was the 3rd of Tuesday, the 3rd of November, just a few weeks ago. Are we going back into an uptrend? Well, we don't know yet. We have to sit and watch, and we wait for the next bar, and the next bar is red. So that's our pullback. This was just a pullback. It was just a 1 bar pullback, but that's okay. So that's our sell signal, and roughly in the first week of November, you could have sold IBM, and the stock went down 10 points coming in to the last couple of weeks. Let's look at Verizon, okay? Now this is coming into November. This is the last week of October. Someone could say, well, we were doing very well, but it looks as if we're just kind of in a range for the last 3 weeks. Perhaps we're making a high-level consolidation and getting ready to go higher. But look at this last bar. Boy, this is a bad sign here. We closed lower. Maybe we're going to test these lows again. So at this point, people are probably saying, I'm not really sure what the trend is. It's simple to find out what the trend is with the PET-D, because the entire time, all of the bars have been green, except for today, this one day, which I believe was the 20th, okay, of October. So are we in a downtrend yet? It's too early to tell. We need at least 5 or 8 bars to tell us we're in a downtrend. So the next bar was green. So in actuality, this one down day was just a pullback, a one-day pullback. And so it's time to get back in. So you could have purchased it roughly around 75, 76, and the stock went up 14 points coming into this week in November, okay? Now let's look at Yahoo, all right? This is a little bit older, a couple of months ago in September coming into October. Someone looking at this will say, well, Steve, yeah, it's easy to see in hindsight that we were in a downtrend. Yeah, that's simple. I mean, I could have looked at this and said, yes, we're in a downtrend, and I would have known exactly where to sell looking at this. That's true. It's easy to spot anything in hindsight. But wouldn't you have liked to known up here after these first 3 or 5 bars that you were in a downtrend? You could have easily done that with the PET-D because it was red prior to this large sell-off. So that's the beauty of the PET-D. That's why we call it the Primo early trend detector, because it often tells you many times in advance of a trend of which direction it wants to be headed. Now, once we started heading lower with a little bit more strength, we had a nice bounce here, and we didn't turn green until this bar here, which was followed by a red bar. And then we went lower, another green bar followed by a red bar. So you had 2 sell setups right there you could have taken advantage of well after establishing that you were in a downtrend, all right? But look what happened here. This was coming into October. Well, we had a confluence of green bars here, so now the market was telling us it wants to go higher. So we're no longer going to be selling. I know a lot of people would say, well, this is just a pullback. We're going to be shorting somewhere around here because we've come up to some very heavy resistance levels. This was a good resistance here, so this is probably where the institutions are. These are the Fibonacci or support and resistance levels. We want to exit everything right here. It's silly. You don't need to overcomplicate your trading. You don't need to add in all this noise or outside information. Just look at what the PET-D is telling you. The PET-D is saying, well, listen, the bars are still green. So the market is still telling us that we're going higher. So what we want to look for is a red bar. And in fact, we had 2 red bars. All right. So sure, all the people would be saying, boy, see, we told you to sell here. We're probably going much, much lower. That's not of our concern. We want to wait for the first green bar, which is right here. And if you could have taken advantage if you had sold up here, but you would have had to been very quick because it went right back up there. And it's much better to be in sync with the trend as opposed to trying to pick tops and bottoms. And you would have just simply purchased instead of using support and resistance and added about 3 or 4 more points to the upside. Had you taken the first sell and the first buy, well, you would have had roughly 9 points to work with in September and October in Yahoo. Doesn't seem like a lot. Remember, this is only a $30 stock. Now, I want to show you Google here. Excuse me. I realize this is an expensive stock and not everyone can trade it. But we show you this because we have a lot of clients and a lot of members who like to trade options. You can either trade directional options, or we can trade spreads based off of directional moves in the market. But a lot of people, when they trade options, don't really have a good idea of what the market's going to do. So they're basically just kind of trading the option. They're not trading the stock. Well, with the PET-D, you actually have a really good idea of what you think the market you're following is going to be doing. As we look at Google here, in the middle to the end of October, the majority of the bars were green, followed by 2 red bars. Doesn't mean we're in a downtrend. That was just the pullback, then followed by a green bar. This was coming in to the end of October, just about 3 or 4 weeks ago. Now, we know this is a $600, $700 stock. Obviously, it's very difficult for most people to purchase this, but you could have purchased long calls, or you could have purchased calls even out of the money, because look what happened after you would have purchased. Stock gapped up. Once again, obviously some news or something happened. We didn't know anything about it. But the day before, we could have purchased the stock or purchased options. It's that simple, okay? Now, a lot of people at this point would say, boy, I missed the move. That was terrible. I missed this entire move here, and I'm not going to do anything now. It's probably going to go back lower and fill this gap. Not really, because the bars are still green. We had one more pullback here, followed by another green bar, which happened on the 16th. This was just last week. So you could have purchased Google a week ago, and it went up even more. Okay. Now, had you just taken the very first setup, that was 100 points in your favor. We're not saying everyone would have taken advantage of that. I know personally, if I had traded this, I would have most likely gotten out on the opening of this day. But still, this is the beauty of these techniques, how they give you the opportunity to capture these moves. Okay. Now, that was a very expensive stock that you could have applied options to. Now I want to show you how you can use this in a totally different direction in a totally different time frame. Let's look at Win on a weekly time frame, because we know that many of our clients are investors and they don't trade daily bars or intraday bars. They trade weekly and even monthly bars. So let's look at this on a different time frame. We're looking at Win on a weekly time frame. Obviously, someone in hindsight would say, well, Steve, once again, it's easy to see this stock has been going lower. Okay, very easy in hindsight. That's true. We've been going down since 2014. But what if you had known way back up here that we were in a downtrend? Okay, you could have if you had the PET D. The PET D was telling you back in September of 2014 that we're in a downtrend. And every time you see a green bar, okay, followed by a red bar, that's your setup to sell. Okay. So Win would have given you two sell setups. Had you taken the first one here, which was just roughly a year ago, that's 125 points in your favor. Okay? You could have had leaps. You could have been investing in this, or you could have, let's say this stock was in your portfolio and you were actually long. You could have used that signal to exit, or the PET D to tell you to get out of the market entirely. Okay? Now, we can also use this and see how profitable it is in the face of news. A lot of people say, well, Steve, sure, this all works fine and well, looking back here, but what about news? If news comes out, this is not going to work. Well, listen, I'm not going to guarantee you that every setup works. I'm just going to tell you you're increasing your odds for consistency if you apply this, regardless of what the news is. Now, we all remember what happened this past summer in August. Okay, the market fell out of bed. In fact, as you see here, it was reported on August the 24th that the market fell down over 1,000 points intraday. All right. Now, all I heard from people who aren't members of mine, who aren't members of our website, saying, boy, Steve, I know you teach how to trade the markets, but there's no way anybody could have made money today. Okay. First of all, when you have all these hedge funds and these high-speed computer, consistency trading or frequency trading, I should say, there's no way a little guy like me can make money trading the markets. Okay. It's not fair. These guys control everything. And as you see here, the market was down 1,000 points in early trading. It plummeted, all right, based off of these programs. Maybe there was news in China. There's no way a little guy like me can make money. Okay, what do I always tell them? I say, that's not true, okay? Let's look at the diamonds. That's the ETF of the Dow Jones Industrial Index, because obviously we can't trade the index, so let's look at the diamonds. Here's the day on the 24th where the market fell out of bed, okay? Someone looking at this would say, that's, boy, that's terrible. How could I have known this in advance? Well, if we had gone before, we know that weeks in advance, the PET D was already coloring all the bars red. So you knew you were in a downtrend. Right off the bat, you know that if you're in a downtrend, you shouldn't be buying anything. Why would you buy in a downtrend? So if you're in a downtrend on the diamonds, you want to be selling. So this one technique I'm sharing with you today gave you actually two signals. Whoops, kind of made a backtrack there. Here's the first one on the 11th, and another one was generated on the 19th. Weeks in advance of that 1,000-point sell-off. So don't you think you could have done well just knowing this one simple technique? Okay, you had two chances. Now, what if you said, well, Steve, I'm an investor in the markets. I don't look at daily bars. I look at, different time frames. All right, here's a weekly bar using the exact same technique. Going back to July into June, the PET D was already coloring the diamonds, or a representation of the Dow Jones Index, red. So it already knew well in advance we were in a downtrend. You have one green bar here in July and followed by a red bar. This was on the 24th, a full month in advance of the big sell-off. You could have taken advantage of that. So I never want to hear people telling me that, I'm a victim. I have no chance against these big guys. It's not true. The reason why you're a victim is because you're relying on this conventional wisdom like Fibonacci, like support and resistance, like volume, like looking at institutions to tell you what to do and how to trade. Trust me, there's no consistency in trading this way. Take it from me who tried these firsthand over 30 years ago. It didn't work for me, so why should it be working now 30 years later? There's no consistency in these methods. They'll work every once in a while, but over time, you really won't have anything to show for it. The best thing and the only thing you should be listening to, what my mentors taught me, is the market. That's the chart right in front of you. And the pet D listens, it knows how to listen to the market, and then it tells you what the market is saying. It's either saying we're going up by the bars being green, or it's telling you it's going down by propensity of bars being red. All right. Now let's go to an even different time frame. Let's continue to look at the Dow Jones Index as represented by the diamonds, but let's go to a long-term time frame. There's a monthly bar chart. Okay, going all the way back about 5 or 6 years, back to 2009. As we can see here, the majority of bars have been green. We can still use this simple technique. Once we get one red bar followed by a green, that's a buy setup. And look at all the buy setups we had. Once again, everyone's saying this market just keeps going up. I mean, how do we know whether to stay in or not? It's easy. If the bars are green, you know that the trend is still up. So going back to 2010, 2011, you had all these buy signals. And guess what? Look what was generated last month. The market fell out of bed in August and September. In October, it went back up. And after everything I've revealed to you today, what is that telling you? Most likely we're going to be going higher. Now, is this guaranteed? No. It could fail. We could all of a sudden turn around and go south. That's okay. Remember, it's about consistency. And what does consistency mean? 2 steps forward, 1 step back. So you always protect yourself. You always want to protect yourself because, you know, every once in a while you will have a small minor loss. But usually you'll be able to recoup it on the next trade or so. 2 steps forward, 1 step back. That's the key to success. That's the key to longevity. So let's recap what we revealed to you today. I taught you a simple but high probability technique for trading pullbacks in all markets, okay? I showed you stock markets. I'm going to show you a few more charts before we conclude here. But remember, as I stated, as you can see how much attention I give to educating and to making sure that you understand it. My goal is to teach you. I don't want to force feed you signals. I don't want to simply have you say, well, okay, what am I supposed to buy today? What do I sell today? And have no idea why you're doing it. Just because it's simply being given to you out of some chat room or some trading room or on some email link that you're given. I don't believe in that. There's no way you're going to become consistent trading that way. If that's the way you've been trading, ask yourself, are you where you'd like to be? Okay, are you really that financially secure and stable with your trading? I would most likely say that you're not. It's been estimated upwards of 80% of all traders fail. I was right there along with you. My first couple of years of trading, I failed tremendously. I couldn't make a dime. I was trading the way the majority of traders trade, relying on all the conventional wisdom, Fibonacci, pullbacks, using different levels of Fibonacci levels and support and resistance. I was looking at volume. I had all the news posted, waiting for every news announcement. I had tons of indicators, 20, 30 indicators on my screen. It was the most complicated way of trading. But I was doing everything I had been taught, and guess what? I couldn't make a dime. My mentors taught me the specialist edge. That's rooted in simplicity and listening to the market instead of this outside information, which they basically called noise. And I call it that today as well. None of our courses or strategies or techniques focus on any of that. Only thing we focus on is keeping things as simple as possible, as I just shared with you today, and how to listen to the market. After you get that information, then you're really just my student. I mentor you until you can finally go on your own because it's not required to get anything else from me. You should be getting all your signals and all your information from your own decision-making process, not from some guy telling you over a webinar, okay? So in order to get to that level, here's what we're offering you today. We're offering you the PET D at a special discounted price. This is the Primo early trend detector that I was, informed about and taught over 30 years ago, but I turned it into an algorithm. That's why we call it the Primo early trend detector. This comes with the add-on, which will change your bars from red to green. It includes 2 continuation trading techniques as well as 2 pullback trading techniques, all right? It also comes with a trailing stop technique. Remember, you can apply this to any market, any strategy in any time frame. In fact, let me show you some more examples just to, if you're not really sure yet. Let me show you, this happened in the ARG just this past week. Someone looking at this would say, well, there's no real trend here. I've always been taught that in order to have a trend, you need higher highs or you need some type of volume to tell you that you're in a trend. Basically, ARG is going sideways, so I'm going to stay away from this stock until it gives me more information, okay? Well, if we look at the news here, which was on the 17th, all right, this is basically telling us just last week that there was an offer to buy Airgas in a deal worth about $10 billion. Now, looking at that chart, it didn't give you any of this information. So if you look at the 17th of November, it was too late. The news had already come out. You had maybe a couple of days to get in, but you had no idea what was going on. Well, that's not really true, because if you had had the PET D, you apply the PET D, and you see that the entire time you thought it was going sideways, ARG was actually in an uptrend. So that was telling you shouldn't be selling, you should be looking for a buy setup. You had one red bar, followed by a green bar here on the 13th, which was just about 2 weeks ago. That was your buy setup. Had you taken advantage of that, you could have had 35 points in your direction in 2 days, okay? Using the same technique I just shared with you. Okay, this just happened a week ago. Now, let me show you something even more current. Let's look at the short term. A lot of people like to trade short term. In fact, we have a lot of Forex traders who like to trade short term. So let's look at the Euro Yen. This is a 30-minute chart. As you can see here, this is coming in to the end of the weekend, the 22nd, which was a Sunday, but that's the way the Forex markets are structured. They begin trading on Sundays. This was a 30-minute chart from the Friday, the 20th. Obviously, we're in a downtrend, once again. But how would you have liked to know you were in a downtrend way up here? Okay, well, we simply add the PET D. And way up here at these levels, before anything seemed to be going lower, the PET D was telling you in the Euro Yen, an entirely different market, that it's in a downtrend. So all you want to do is wait for your first green bar, which is right here, followed by a red bar. And that's your entry point. And in one, let's say about 1 or 2 hours, you could have made 50 pips. Comes out to about $500. Now let me show you something a little even more recent. How about as recent as about 2 or 3 hours ago? This is in the E-mini. I took the snapshot a few hours before we began today. This is a 5,000 tick bar chart, roughly about a 5 or 10 minute chart if you're looking at minute charts. Okay, it's a 5,000 tick bar chart in the E-mini. As you can see here, the 24th coming into today. Now we gapped down lower and we started to rise. Now a lot of people would have thought, well, you know what, we're making a pennant here. And this is where the institutions have all come in, according to the program I have. So we're going to come back up here and fill this gap. And a lot of people would say, no, 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 this is a Fibonacci resistance. I see here a lot of resistance here, double top. We're going to roll over and make some lows. Do you see how everyone can come up with a different scenario? We don't want to teach things like that. We want things that are cut and dry, that everyone will come up with the same scenario. And how do we do that? We apply the PET D. Once the market opened, the majority of bars were red. Even when we rallied, they continued to stay red, telling us we're in a downtrend. Now we had one green bar here, followed by a red bar. That's a sell signal. Another green bar, followed by a red, and still more red appeared, and then another green bar, followed by another red. So in the very first half hour of trading, we were generating 3 sell signals using this technique I just shared with you. Had you just taken the first one, roughly around 6:45 or so, in basically about a half an hour, possibly a little more than that, possibly an hour, you could have made 10 points to the downside using this technique. That's $500 in just about 45 minutes of trading. That was today. That was just about 2 or 3 hours ago. Okay? I'm sure there was a lot more setups generated in today's market. Unfortunately, I don't have access to live charts here. This is just a static PowerPoint presentation. But I just want to share with you how this works in any market, in any time frame. I showed you charts on stocks that were going back this past couple of weeks, past month. I showed you a Forex chart, intraday chart that happened just last week, and I showed you an E-mini chart that happened a few hours ago, all using what I share with you today, how strongly I really recommend the PET D. So here's the last thing I want to share with you. The PET D is not just for short term. You can also use it for long-term indices. Here's the S&P index, all right? This is a monthly chart going back 20 years. So for all you people who like to trade out of your long-term portfolios, your IRA accounts, how would you have liked to know when the market, made all these peaks and valleys here? All right, this is the S&P index. Each one of these bars represents a month, okay? As we can see here, in 1995, we started going straight up, and then we got to the dot-com crash here. We're at the top at 2000, and the market literally crashed and fell out of bed. It stopped going down in 2003, and then it started another rally until we got up to the banking crisis in 2008, okay? At that time, another crash, and you would have been left holding the bag there again. We didn't start going back up until roughly 2009, 2010, and we've continued to go up higher. But are we making another top? A lot of people have been talking about this is it. Look at all the terrible world news that's going on. What about all the economic conditions? What about the new election happening? There's a lot of worry about if we're at that top again the way we had made before with the dot-com and the banking crisis crash. Well, let's add the PET-D and see what the market is telling us through its interpreter, the PET-D. As we see here, the entire time in 1995, the bars were green. Sure, we had a couple of reds, but here's our pullback pattern where you could have gone long. Once we had 3 to 5 red bars, that's our signal to go short. Once we have 3 to 5 green bars, that's our signal to get back into the market. Once we have 3 to 5 red bars again here in 2008, we could have gone short or bypassed the entire banking debacle. And then in 2009, 3 to 5 green bars again, and we've been going up ever since. Now guess what? We had the 2 red bars here, once again, followed by a green bar. So we're still okay. But wouldn't you like to know when we have 3 red bars? Wouldn't you like to miss the next crash that may look like this and that may look like this? This can all be done with the PET-D. Any market, any time frame, any direction. So you see how powerful this is. You see why I've been using this on a daily basis for nearly 40 years in all my trading. Once again, this is a roadmap for any market. We're offering it to you, to all the people today. And this is so powerful, such a powerful trading method and such a powerful trading technique. We're giving it to you and offering it down to $24.95. It usually goes for much higher, but we're dropping the price down to $24.95, and there are payment plans available. We realize that many of you cannot make that in payment in one lump sum. Don't worry, you can contact my sister site, Proprietary Strategies, and they can put together a payment plan for you so that with a small deposit, you can be using the PET-D as early as today. Let me show you the information you need before we go to question and answer on how to get and take advantage of this great offer, okay? Remember, Proprietary Strategies is my sister site. You can email them at trading@proprietarystrategies.com. If you want to set up a payment plan for a small deposit, you can be up and running. Simply call them at 310-598-6677. But if you're ready to go, if you're ready to just take advantage of the PET-D and not worry about a payment plan, but just take that that offer, here is the link at the very bottom, as you see right there at the very bottom of the page. Now, that is not a live link. You have to copy and paste this link. But if you look in your chat box, they have posted a live link, okay, at the very bottom of the chat box. So you can simply click that on, and it will take you to the sign-up page where you can get that deal at that discounted price, and you can be up and running. And one of the other things I didn't mention about this is that once you purchase any of my courses or products, you are a student of mine for life. So I'm your mentor for life, literally. You can contact me. You have my personal email address once you become a course member, and you're getting the experience and the knowledge from someone who's been trading for nearly 40 years. Anytime you want to contact me, you can contact me, and I'll answer you as soon as I can, okay? Most of the emails I get literally dozens of them on a daily basis. I answer them within the next 24 to 48 hours. So everything is usually answered very quickly. So oftentimes they're answered in just, if it's a slow day, answering in just a few minutes. So I'll be with you every step of the way. So this is something we're not going to just throw it to you and say, well, good luck. I hope it works for you. I'm your personal mentor along the way. If something doesn't make sense or you don't fully understand the process, you can contact me whenever you'd like. So once again, I'm going to keep this information up here for you. There's the link at the very bottom. If you'd like to go to the live link, it's posted there in the chat box. And I want to say thank you for holding off on any questions. I'm going to open up the question and answer box. And let's see, where will the recording be placed? Oh, well, simply contact Sean, contact Proprietary Strategies. They can send you the link to the presentation. Let's see, is the PET-D available for MT4 and what is the cost? Hi, Noel. Yes, it is. In fact, I'm sorry. Let me give you a rundown of the software that it is available for. It's available for, and you can just be up and running and upload it immediately, and you can be using it in a matter of moments. MT4, Metastock, NinjaTrader, TradeStation, FCXM, and Sierra charts. And it also can be applied with Thinkorswim, but there's just a few things we have to change with Thinkorswim. With Thinkorswim, what happens is most people use Thinkorswim have an Ameritrade account and they get the data through Ameritrade. So because of the licensing with Thinkorswim, we can't actually post the PET-D on their charts. But what we can do is give you a free NinjaTrader platform, totally free, doesn't cost you anything. And we use the same data from Thinkorswim. We can split it off. While you're watching Thinkorswim, you can also use the data for NinjaTrader, and you can see what's happening with the PET-D and any of our other courses on NinjaTrader. Now, the best thing about this is that we have a great tech support system, and so we have people that can help you do this for free. It's done automatically. In fact, they can virtually do it for you. So you can be up and running in just a matter of moments. You won't have to worry about anything. Okay. Let's see, next question. Laura asks, you say to go short 3 to 5 bars. Where in that bar would you go short? At the wick, at the open, at the red bar? Can you explain the entry places and where a stop might be? Okay, so basically Laura asks, and first of all, Laura, it's a very good question. Laura is asking where the entry would be. Now, first of all, Laura, let me just tell you that is taught in the course, okay? But I'll share with you just a couple of the very generic and basic ones. Now, what we usually teach our traders at the very beginning when they're our students when they're first starting to use any of our techniques is to use the confirmation technique, and that's what I explained earlier, where once you get a setup, you don't buy at the market or place a limit order. You wait for price to trade 1 or 2 ticks above that bar. Okay, so that's where your entry would be, because that's the most conservative and that's the most basic way of entry. If you've been trading for a while, you're more aggressive and you just want to get in and you have a larger account, then we can say you just enter on the close. You have to wait for the bar to close, and just a minute or two in front before the close, you just enter a buy order. Okay, now this is, once again, you have to be able to be in front of your computer to do this, and you have to be pretty much a day trader, someone who's trading all the time. Another way to do it is that we have different ways that will lower your risk levels, and so we place limits at specific points. These are all taught within the course, okay? But I just gave you 2 basic ones, and they're very valid and they're very good. They're very easy ones. We also teach you about stop placement. We also teach you about exit points, lots of different ways in our courses. But remember, the PET-D is not a strategy. It's not a system. I just gave you a great technique for trading with the PET-D, all right? But you still need the exit rules, you still need stop placement, you still need to know about money management, entries, different entries. These are all things that we teach in our courses. So this all comes with my mentoring, okay? And I can't give away all this information. It wouldn't be fair to the people that have bought a number of my strategies if I just told you all of our entry points, because that's what they've paid for as well. John asks, have I ever used the cloud? No, I don't, John. I don't use the cloud. I know a lot of people do. I have looked it over, and it seems a little bit too subjective for me. Remember, once again, I like things a little bit more cut and dry. This isn't associated with the cloud at all. So I like things that are just a lot simpler and easier to apply. And the cloud seems to me it would be a lot. It's not so easily accessible with different platforms, and it also seems a lot more difficult to access and to apply. I like things that are very simple. You see a green bar, a series of green bars, you're in an uptrend. You see a series of red bars, you're in a downtrend. It's that simple, There's nothing else you need to think about. Shams is asking, Stephen, on the example of the E-mini futures this morning, how does one interpret the day before when there was a multitude of green bars, presumably indicating upside directional bias? Okay, let me just go back there. Since I usually don't do this because I don't like to backtrack, but since that bar wasn't very far behind. Let me just show you this real quickly, if you don't mind. I'm going to go back to that. This is the bar, I believe, in question. All right. Now, right here, as you can see, this is just the last half hour, roughly, of this particular day. When you are trading using this technique, you want to see anywhere from 5 to 7 or 5 to 8 when we're talking about shorter term, daily bars or intraday bars, minute bars. You're looking for 5 to 8 bars of a specific color to tell you that the trend has changed. So obviously you have more than 5 bars. Oops, kind of missed it there. Obviously we have more than 5 bars here, okay? 1, 2, 3, 4, 5. So at this point right here, you could have said we're in an uptrend. But unfortunately, the day is over, so there's nothing you're going to do about it. Now, once the day started, we count 1, 2, 3, 4, 5. What are the color of the bars? Red. So it's that simple. Then what is the trend? The trend has been down. It doesn't matter if we've been rallying. The trend is still down. So you see, this is what I say about things being so complicated, overcomplicating things with conventional wisdom and keeping things simple. All you have to do is count out between 5 and 8 bars. And if the majority of bars are one color, that's your trend. It's that simple. So once we knew here, roughly at this point, that we had a confluence of red bars, we know that we're in a downtrend. Until we get a confluence of green bars, we're in a downtrend. So sure, we had a number of green bars here, everyone, but there were far and few in between. There were just one followed by a red, one followed by a red, one. So that in no way is telling you you're in an uptrend. That's just giving you a signal to get in. So you see how simple this is. There's no levels you have to calculate with all these complicated levels. There's no volume you have to see and have certain levels being met. There's no tides of the ocean or full moons you have to look at. Nothing. It's just all up front, right there in front of you. That's why I love this tool so much. Now, please remember, this is not a system. As you can see here, I just showed you a real high probability way to trade pullbacks. I didn't share the stops. I didn't share what you'd exit. I just said this gave you 10 points of room to move in the next 45 minutes. You could have exited with a 1-point gain, but guess what? That's still a gain. Or you could have tried to squeeze out more. But the point is, we're showing you high probability entry points and then managing our trade with the techniques I've accumulated in roughly 40 years. This is where the mentoring comes in, okay? So I hope that answers your question. Let me just go back to the end point here. So a lot of people still want to copy down all the information. Let's see, Mahmoud. Hello, Mahmoud is a student of ours. How are you, Mahmoud? He says, I made 5 points in the E-mini 2 times by using the PET D. Thanks, Steve. It's a wonderful indicator. Thank you, Mahmoud. Mahmoud is a great student of ours. He's only been a student of ours for about a month. Okay, when he first began, he was emailing me a lot with questions. This is what we want you to do. We encourage you to do that. We don't just want you to purchase the method and then walk away. We want you to get in contact with us and contact us whenever you'd like, but especially in the beginning, we want you to converse with us so that you understand the methods. And now Mahmoud is very consistent now. I'm not going to tell you that Mahmoud has every trade a winner, but he's a very consistent trader now. I don't know what his results were like before, but now he knows how simple trading can be. And that's all we're trying to do. Thanks, Mahmoud. I wish you more consistency in the future, okay? Let's see. Diana is, hello, Diana, another student of ours. I just tried PET D, which I bought last month. Yes, I remember you, Diana, on the YMZ 15, and it worked great. I don't take enough time to watch the training. The program is a great reminder. Thanks. You're welcome, Diana. I'm, once again, another satisfied customer. Please, these are not solicited. I told you in the beginning, I saw a lot of our current members in the classroom today, but they were people that attended my webinar the way the remainder of you did as well. I think Diana and Mahmoud both came to my weekly webinars and heard me speak about the PET D. So, this is not something that we can only share with a few people and say, once we give it to you, it's closed because we don't want to ruin the markets. Trust me, the markets are bigger than anyone. It's like an entire universe of opportunity just waiting for us to take. So there's no limit that we can take from the markets from this. In other words, we can't just try and restrict it to only a certain amount of traders. There's more than enough to go around, And so Diana and Mahmoud were students just months ago who have tried this and are already started to become consistent. Ask yourself, you've been trading for a while, okay? And you said, okay, well, I'll check out this guy. But once again, how is your trading going? We're entering the last month here in just a few weeks or just a week or so, the last month of the year. Are you anywhere near where you thought you'd be January, some 11, 12 months ago? I can almost guarantee that you're not. Most traders make all these big hopes and dream promises at the beginning of the year and most likely never reach them. I know I did when I first started trading. I really had these big hopes and dreams, and by the end of each year, I thought I wasn't going to be trading much longer, okay? It wasn't until my mentors taught me the same simple techniques that I teach my students that I started to become consistent. And that's my goal. I want to teach you these things so you can become consistent, okay? It's not about just simply force feeding you signals and telling you this is the perfect time frame. This is the perfect market. This is what this market's going to do today. I don't believe in that. I just want to give you the information that has stood the test of time and then let you make your own decisions. That, in my opinion, is the only way you will become consistent, okay? If you're interested in becoming consistent in 2016, please, I strongly suggest take advantage of this discounted price because there are very, very strong, and I'm not just saying this, there's really strong implications that that price may even go about 30 or 40% higher in 2016. That's how popular the program is, okay? So take advantage of it now. It's yours for life. I've been trading the PET D for over 30 years. There have never in that one time been any applications or upgrades to it. It's the same thing I've been using. So don't worry, there's not going to be an upgrade next year where we have an entirely different set of values where you have to spend an extra couple of thousand in order to get the new and advanced version. No, it's the same version. So you basically are going to be using the same thing I've been using for 30 years. So you don't have to worry about upgrades every 6 months. It's not like that. This is not Apple. We're not going to do that to you, okay? It's the same thing, and it's yours for life, okay? But we may be going into some subscription base because that is really how powerful this is. So if you want it for life, I strongly urge you to take advantage of this, okay? I want to thank you all so much for taking time out of your day today, and I want to wish you all a great holiday, a great Thanksgiving, and I really look forward to all of you becoming students of mine and members of the PET D course. Thank you so much for attending today, and I'll see you next time. Bye-bye.